Hello everyone, Yate. This is Peter Deswood III again. I've been studying the PPP, the Paycheck Protection Program. It's a loan for small businesses. It's a forgivable loan depending on the circumstances. But this is just a little bit of background about me. I had someone say, well, why are you making these videos? Well, the reason why is I do a lot of research. I do have a degree in accounting. I do have a degree in education, so I like to do a lot of educating about some of the stuff that's coming out. I also have a master's in leadership from Penn State. I also was working on a doctorate in leadership, organizational development. I was all but dissertation. In 2015, my dad passed away. He used to work for the Division of Economic Development as a senior program analyst and council delegate. But growing up, my dad, I learned how to start businesses and run businesses. And I saw my dad go through the 8A process, become a Navajo preferred business. He had a really large construction company. We used to build hogans, various different businesses. I've started businesses on my own as well, but I've been doing taxes and business consulting. I've been doing taxes since 2003 and some small business consulting probably since 2011-ish. Okay, so back to, for some reason I feel I have to give my credentials because people are questioning why I'm making videos. Well, anyone can make these videos. All they have to do is study it and research it, okay? Again, like I was saying, I stopped with my dissertation because I did lose my father, and otherwise I would have the little PhD letters after my name. I wrote 113 pages of my dissertation, chapters 1 through 3, but I kind of lost that. Anyway, back to this, the PPP. Okay, so the Coronavirus Aid Relief and Economic Security, they call it the CARES Act. It allocates approximately $350 billion to small businesses. They help keep workers employed amid the pandemic and economic downturn, all the things that we're seeing right now going on. Closing of business, shutting down of business, people backing up employees. I just went downtown to get a pizza for us from Three Rivers Pizzeria, and there's just 2 people working there. Okay, so that's kind of what this will take into account. Okay, this CARES Act is known as the Paycheck Protection Program. So the initiative provides 100% federally guaranteed loans to small businesses. Now, the SBA, or Small Business Administration, will be releasing more details in the next couple of probably weeks or month, probably next month or so. So what you have to do, it does take a little bit of effort. The other loan, the EDBL loan, is just $10,000. You can do that from home. With the PPP, the Paycheck Protection Plan, you do have to go to a bank. It will take some effort on your part to get up and go to the bank. And from what I've been reading, it'll be traditional banks that you'll go and apply for this. People who are eligible are people who own businesses less than 500 employees, sole proprietors, independent contractors, people who are self-employed as well. Where do you get it? Again, I talked about this. It's any institution that is approved by the SBA, which is Small Business Administration, or the Department of Treasury. Basically, it's just a bank. Okay, probably where you bank. Wells Fargo. I bank at Wells Fargo, so I go to Wells Fargo. Okay. So this is a little bit more detailed. How much? Okay. So the max loan amount is 2.5 times the average monthly payroll cost. Okay, during 2019. Max amount is based on your self-employment income. Okay, if you are a sole proprietor, independent contractor, if you're self-employed. Okay, so here's the thing that's interesting about this one. So if an employee's compensation is over $100,000, they won't contribute to your loan power. Okay, now if you just started this business, let's say in December, well, what it's saying is what the law is saying, that is, you would take 2.5 times your average payroll for January and February of 2020. Okay, so you would take the average of January and February. Okay, see, amount of the loan given, the loan amount forgiven will be based on qualifying business expenses in the 8 weeks after the loan is originated. Okay. Now, what are the qualifying expenses? They can be payroll costs, utilities, mortgage interest. Let's see what else. Rent payments, group health benefits, and then interest on existing debt. So a lot of this stuff, you guys know. I mean, everyone's that's going to be watching this video they're probably small business owners. Okay. Now, the amount of loan forgiven will be reduced when there is a reduction of the number of employees or a reduction of wages paid to employees. So if you bring back employees, then there will be no reduction. Okay. So then, what if your loan is not forgiven? So here's the thing that's really cool about this one. If you're a small business owner, you're already going to pay rent. You're already going to do your payroll. You're already going to pay your utilities. You're also going to continue to pay your mortgage interest, and you're going to probably pay your health benefits for your employees as well. Okay, but the thing that's nice about this is you're still going to do this, but if you do get the loan, right, it's free money to help you pay your regular expenses. You're going to pay them. That's the thing that's really cool about this loan. Okay, so here's the thing with this loan. From what I'm reading, the loans will be available through June 30, 2020. Okay, so that's one thing. The date whenever you can start, they're from what I'm reading is that they're waiting for banks to get with the SBA and the U.S. Treasury to figure out more of those details. So I do have some really cool other facts about this. I found this one on another website. Okay, and I kind of have talked about this already. So it says businesses can defer repayment for up to a year. There are no borrower or prepayment fees. Okay, so no collateral or personal guarantee is required for the loan. So the lender, again, like I said, is a bank that does SBA 7A loans underwritten by the SBA. Okay, the interest rate on it not to exceed 4%. The length of the loan is 10 years. When is the first payment of the loan due? These are questions that people typically ask. At least 6 months after the loan origination date. Interest is accrued during the deferment. Okay, let's see some other things. Is a personal guarantee required? No, there's no personal guarantee required for this. Okay, so I mean, whenever you look at it, what it comes down to is these are expenses you will already have paid to stay in business. And the nice thing about it is that you apply for the loan, then it's the 8 weeks after you first get it. So those are the 8 weeks that they're going to help you pay for these expenses. Okay. Again, if you have any questions, comment below, like my videos, and follow the work that I do. Again, I do have a business background and an education background. That's one of the reasons why I like to make these videos. One is to help people understand finances. So if you have any questions, just comment below and let me know. Like these videos and subscribe to my channel or my page. And I appreciate you all watching the work that I'm doing. Again, it's for educational purposes, okay? But I mean, a lot of this stuff you can actually just do them and file this on your own. Some important things are make sure you have your documents ready whenever you go in for the loan, okay? All right, again, thank you. Here, Peter Deswood, the third. Okay, have a good day.